Come on.
Well, hello and welcome to the Leaders Fuel podcast. In case you didn't notice, the name of the podcast has changed from Leaders Fuel Daily to Leaders Fuel, and that's because Leaders Fuel Daily will now be daily emails that will be sent out. And this is the 22nd, episode of Leaders Fuel now, and you probably noticed already that you're not looking at me on video, you're looking at me on an avatar, and that is because I'm having some connection issues here and with the delay in the video. So better just to look at my avatar here, but none of that really matters. What really matters is I'm here with a great human being, Matt Green with Ledger Medial. Matt, it's been a huge pleasure to work with you professionally and get to know you. And I appreciate you taking some time out of your busy schedule to jump in on a Leaders Fuel podcast here and be the first one under the new name. And so thanks for doing that.
Yeah, thanks for having me. I'm excited to be here.
So we're going to talk all about what you do. It won't be hard for people to figure it out as we get into the topic here. But at the end, I want to give you an opportunity to let people know about your business and how you can help them. But you've got a very specific message for us and some things that any entrepreneur would need to know. And all entrepreneurs would be great clients for you, but you're being generous here by giving us some sort of insider information, ways to help us be more wise about the way that we structure and run our businesses. And so I know that the topic that you're going to share with us today is the 5 things that business owners do to lose money on taxes. So all of us need to hear this. I'm looking forward to hearing more about this and learning more. And I do understand that the first thing is just the way we set up our business in the first place and having it under the wrong entity structure. So tell me more about that. And I'm anxious to hear about all these different ways that we can be more smart about how we manage our money.
Yeah, I'm excited to do this because that's not a good conversation to have with people after the fact when you get to tell them, hey, you owe substantially more taxes than you were planning. And these are in no particular order, although that wrong entity structure would be at the top of the list, the biggest mistake I see. And you really just want to ask yourself a couple of questions. And it starts with, is the entity going to own building or land or any kind of major asset like that? Mm-hmm. And the second would be, are you going to take on more than 100 shareholders? If the answer is yes to the first, you're going to own building, you're probably going to want to be a partnership or just stay as just a single member LLC. And the second, if you're going to take on more than 100 shareholders, that would be a rare instance that you want to become a C corporation, which most small businesses do not want to be a C corporation. But other than that, you're going to want to be an S corporation. S corporations do not pay self-employment tax. There's a few things involved that you got to be careful of to make sure that you're doing everything right, but there's really only a handful. But having the wrong entity structure can cause you to be subject to self-employment tax, which is another tax in addition to income tax on top. And it's around 15.3%. Yeah, obviously C corps can have the double taxation problem, and then owning land or a building in a S corporation can turn out bad, as if that property is distributed to the partners or the owners, it can create a taxable gain at the corporate level, which is not the case with a partnership. So really, it's when I tell people, I meet with people that are starting a business, or I get asked questions, they say, how do I start a business? Starting a business, in my opinion, is fairly simple if you just follow these steps. Mm-hmm. You come up with the name of the business. Mm-hmm. You go to the Secretary of State website in your state, make sure that name is not taken. You register an LLC. Ideally, you hire an attorney or someone that does that. Mm-hmm. Depending on the complexity involved, you set up the LLC, you get an EIN number. You take the articles of organization that you get for setting the LLC and the EIN to a bank, and you set up a business bank account, and you do not commingle. You use it for business. You take money out, you can take distributions, but you pay your home mortgage or send your wife to the mall, or you don't go to Disney World or whatever else. You use it for business. So that's really where I would start with that. And it's important to know that once you have the LLC in place, it can be converted to any one of those three. It can be converted to a partnership, a C corporation, or an S corporation. So go ahead.
Yeah. So you answered my question. The biggest question is I can imagine that someone who's listened so far and they know that their business is under one of those, and they think, uh-oh, I might, based on what he said, I might not be in the right thing. Then it can be changed. And is that something that you help people with?
I do help people with that. There's some cases that I may refer them to an attorney, but 95% of the time I can do that. I do a lot of S conversions, converting LLCs, S corps.
Mm-hmm.
You can do C corps and partnerships. It's slightly more complicated, but it can be done. And a lot of people don't realize that partnerships, if you're a general partner in a partnership, you are subject to self-employment taxes if you were just a sole proprietor. And you're technically not supposed to pay yourself like payroll through a partnership. You can only take guaranteed payments, also subject to self-employment tax. So most businesses, they're going to want to be an S corporation. If you're not like buying real estate for the sake of buying and selling real estate, or you're going to rent properties, you're probably going to want to be an S corporation unless you're going to take on more than 100 shareholders. So,
and what about for someone who's on that solopreneur journey, and they pretty much know that anytime in the future they're not going to add other people? What would be the best way for a person like that to start?
Definitely set up a single member LLC, which defaults to being a sole proprietor.
Mm-hmm.
And then the thing about that is, once you have that LLC in place,
mm-hmm.
you can convert. You actually have until March 15th of the following year to retro back to the date at which that LLC was in place, as long as you can't go back like 2 years, but you could go back to the beginning of the prior year
mm-hmm.
and eliminate a self-employment tax. And normally I say, once you could ask 10 different people and get 10 different answers about this. But once you get to about $25,000 to $30,000 net income, revenue minus expenses, then that's when the benefits of becoming an S corporation outweigh the costs. And meaning you're eliminating the self-employment tax, which you're taking on. You have to pay yourself a reasonable salary.
Mm-hmm.
So you have to hire a payroll company, and you've got to file a separate tax return, obviously.
So that's a good awareness to have, is that if I'm on an upward journey and I'm things are going well and I'm starting to net out more revenue, that by virtue of making the change, I'm going to put myself in a better tax position, but I also have to be aware that I am going to take on some expenses that I wasn't doing before. They're going to be kind of a part of the now new cost of doing business, right?
Exactly.
Yeah.
Yep.
Yeah. Okay. So other than the entity structure, what else would be something that I want to be careful to avoid as far as paying too much on taxes?
The second one I have here is just not taking advantage of credits. Credits are different than expenses, and that you arrive at your net income, revenue minus expenses. Credits are kind of different. Usually these are at the state level. They can be complex, and I don't want to get too deep into all that.
Mm-hmm.
But an example would be in South Carolina. There's on the state return, there's an active trade or business deduction. And regardless of your entity structure, it's based on the net income of the business. And a lot of people miss that. And I see that all the time. Or they don't do it properly. There's some limitations on how much you can take if you're a Schedule C sole proprietor, or if you're another entity. But also, you want to make sure that most states are going to give you credit. You're almost always going to be owed the taxes on the income you make anywhere.
Mm-hmm.
If you're a resident of that state, but then you can get credits for taxes paid to other states. How most states work. It's how South Carolina works.
Mm-hmm.
And that's a big one. But I partner with a few companies that go way beyond this and way beyond my scope of what I do, that can kind of take a survey and they do a questionnaire, and they can actually go way deep into this stuff. Worker opportunity tax credits, cost segregation, and they can really do an analysis. And most of these companies can come in some cases save you a lot of taxes, and they only take a percentage of what they save you. So there's no really any out of pocket money, if that makes sense. So it's good to make sure your accountant partners with some of these people as well.
Yeah, and all of everything that you're talking about is really about all of the legislative processes that are in place and all the laws that are out there that, a person who goes into business typically doesn't have that knowledge. And even if they do have that knowledge, the knowledge has changed. And we're in an era right now when tax laws are changing so rapidly that it really behooves a person, even with whatever level of experience they have, to have someone like you who, if they don't know, they know how to find out the answer and are connected with their finger on the pulse of that. And so that's because I suppose, well, let me ask you, in terms of this and taking advantage of tax credits, what would be an example that someone might relate to of where they really missed it? Something that you've done where someone completely missed some credit that could have been available to them?
Really, the one that comes to mind is the active trader business deduction. It's the simple one. There are others. I would say really a lot of times returns can be filed without getting those credits to taxes paid to other states, but that's really all that comes to mind. I just deal with that and see that overlooked so often. And my old boss once said that he didn't even know about it for years, and he said he probably cost people thousands of dollars. But it's a matter of research, and it's kind of like a scavenger hunt when you're doing the return. And a lot of times you pay for a good software that kind of alerts you to these things, but then you kind of learn about them and how to do them properly. And if you're doing a tax return in another state, you obviously want to look at go to the Department of Revenue, just look at the credits that are available. But specifically, the active trader business deduction in South Carolina is missed all the time, and it can result in thousands of dollars in savings.
Is it, you mentioned something actually that I was thinking about, and that is it possible, or have you ever experienced that a tax software didn't actually catch some of these potential deductions or credits?
Yes, it can happen. You want to make sure, the common one is the credit for taxes paid to another state. You definitely want to review each. I mean, people move or they have businesses in different states. A lot of times it has to do with rental properties. You want to make sure that if they're paying tax to other state, that's getting recaptured at their resident state. Okay. They're getting those credits.
Yeah. All right. Well, what would be the third thing then if we've got the entity structure and looking for the credits? What else do we want to be aware
of? Definitely knowing what expenses you can take, and somewhat aggressively, you can take your home internet and your cell phone, which it's hopefully not costing you $1 million, but that can help big time. And tracking mileage. Miles currently 56 cents a mile in 2021. That can add up faster than it sounds. 56 cents may not sound like much, but if you're driving 100, 150 miles a week, and a lot of times people come to me and kind of after the fact, they're filing taxes, they can't go back in time. They haven't tracked this. And it's not wrong to come up with a reasonable estimate. If you knew that your job entitled you to, you drove at least 50 miles a week. Yeah. There's nothing wrong with taking 50 and multiplying it by 52 and taking that as a mileage deduction, as long as you have a reasonable basis for your opinion.
Sure.
And you've got all that documented.
And I've certainly experienced it as I go through tax software. It gives you the option of essentially putting in a lump sum, and it doesn't require you to show all the back end calculations of that. And, obviously there's software out there that will even track your mileage on your phone if you want to have that level of connectivity. But I've noticed that there is the option that you've mentioned. Let me ask you a question about what you just said there, because when you were talking about setting up a business, you basically said, look, your bank account for your business is business only transactions. Would it be smart for a person, if they're going to include their internet, phone, any of those kind of things as a part of a business expense, to pay those through their business account versus their personal account?
Yeah, that's fine. I mean, I would recommend doing that. You can always also make a journal entry to record those.
Mhm.
Usually you leave journal entries to accountants, but that's not bad as well. Yeah, you can pay them from the business account.
Yeah, so it might be smart if you're doing some kind of an auto draft or whatever, just to make sure that it's routing through your business account if that's something you're going to claim.
Yep.
Okay. All right. So we got to cut there's two more things I suppose that you've got to share with us about what we want to be aware of. What are those?
Yeah, and the fourth one here, it may or may not. I mean, it could prevent penalties, but it's not being aware of your tax liability throughout the year. And this is more of a budgeting thing. People that aren't aware, they may put the connection that cash in and cash out, that's your net income, but that may not be the case. A hard conversation I've had with people is we made 500,000, but we bought a $200,000 building and spent $150,000 remodeling. So we didn't make any money really. Well, that's not the case. I mean, this is just one example.
Mm-hmm.
Buildings are treated differently. I mean, you don't get to take an expense for that until that building is fully ready to be serviced and placed into service. And all those expenses are put together and capitalized over 39 years. So if that happened in November, it's monthly. So you're only getting two months of 39 years of depreciation of that total cost. So you don't want to get hit with a big tax liability. I mean, it can be, paralyzing to a business, and that you go through the year and you got this plan for the next year, and all of a sudden, oh no, I don't owe 3,000 taxes, I owe 50. And it does happen. I mean, I've had the misfortune. I once told someone they owed $260,000 in taxes.
Oh my goodness.
And that's not a good conversation to have, and I can't do anything about it. So you just want to monitor your tax liability throughout the year. And really the way to do that is to have someone looking at it monthly. If at all possible to have a monthly accountant, I mean, it's just highly recommended, and it's a fraction of the cost of hiring an employee. But if not, you definitely want to check in with your accountant and make sure they're running a tax rejection, or you just ask them a question. And like something like that, somebody called me and said, hey, I'm buying a $300,000 building. I'm not going to charge them to answer the quick question, tell them what I just told you. Obviously.
Right. Yeah. So I can't imagine being in a position where you thought you were flying high and all of a sudden you owed basically the cost of a home mortgage for a great 2,500 square foot home, right?
Yeah, exactly.
So that sounds like a big one. So if I'm in business and I'm out there doing my thing, like what should I be paying attention to sort of mitigate that? I understand that, the idea of working with an accountant, and obviously that's the best way. But in addition to that, what should I be looking at, paying attention to? How can I be more in a position of awareness so that I'm not all of a sudden finding out that I have money owed that I just wasn't aware of before?
Really just running tax projections and seeing where you are. You want to pay quarterly. You want to, and there are projections there. Nobody can tell the future. I've had several people that I thought were going to make, a certain amount in the last few months, and they have losses, or they make way more. So, but you're still on top of it and you have an idea about it. And then that prevents you. Maybe now is not the good time to go buy that building and do all that and put $300,000 into something. And paying quarterly can eliminate penalties. Usually those aren't extremely, paralyzing, but you can get hit with a failure to pay estimate penalty. And at the root of that, knowing your tax liability is having proper records. So you're kind of budgeting as the year goes on, which helps as well, and prevents you from filing late. I mean, if you don't have your books in order come tax time, you don't get your stuff into your account, by a certain date, they're going to set a deadline. But, where there's a month before the deadline, you're just going to have to file an extension. And even though you file an extension, that can eliminate failure to file penalties, there's still failure to pay penalties. The tax is still due. A lot of people don't understand that either, there's not just like this one type of penalty. The IRS has all types of penalties, and then there's interest. So just having someone in your corner looking at that all year and making sure that you're on top of that is just a good idea.
So it sounds like that if I have an accountant or if I'm working with a bookkeeper, I don't want to just talk to them at tax time. I need to have some regular connection with them.
Exactly.
Yeah.
That's
Yeah. Okay. And then what's the last thing? What the fifth thing here?
the last one is just not I guess not understanding your engagement with your accountant, or not fully utilizing your tax accountant or your accounting firm, or just, and I always say it's like landscaping. If you hire someone to cut your grass, doesn't mean that it's their fault if your leaves pile up in the fall unless you pay them to do that. So you want to understand, you pay them to do your taxes. You're not paying them to be. I get clients all the time because they left their accountant, and I'm sure they've left me and said the same thing, because they didn't tell me this was going to happen, because they're not sitting around secretly monitoring your life. You bring your stuff to them and pay them to do your tax return. That's what you're paying them to do.
Yeah.
So, and one thing is, tax accounting firms between like the 1st of January to April 15th, they can't breathe.
Yeah.
So, and there's opportunity costs. I mean, if they got piles of work that they're getting paid for, rapidly going out the door. Yes. And they don't have time, that you may call them, they may not be able to call you back in a couple of weeks. And it's just how it is. And because there's other people that are procrastinating and waiting. So you want to check in. If you can't afford a monthly accountant, then you want to check in with them. I would say sometime in July, early August, and maybe in November or December, and just kind of tell them what's going on. Or just like, I'm perfectly happy. If someone's a tax client of mine, you call, ask me a quick question, I'm going to try to call you back or answer the phone, or shoot me an email, get back to you as soon as possible. And if it's a quick answer, I'm happy to give you a quick answer. And if maybe I bill you for a meeting, an hour meeting, or I go do some research and bill you for that, but it's not even be anything paralyzing. It prevents something that's not really business related, that I have to have this conversation every year. Is people, they have these investment accounts and they sell stock, and they think because the stock, they didn't get the money, it's still a gain. And sometimes it's like significant gains. And that's a tough conversation. Like if you called me and said, hey, I'm going to cash in this stock, I'm going to make like $30,000. Am I going to owe taxes on that? Yes. So there you go. Quick answer. Now you know that maybe you may not want to do that now. And if you want me to run a projection, $250, I'll tell you how much money you're going to owe because of that. And it eliminates me telling you in February or March that, you owe $20,000. Exact scenario happened this year, $20,000. And he did not believe me. He called and got a second opinion, but ultimately I was right. Yeah. Yeah. So essentially, so that's very good to know. And I'm sure that there are plenty of people that have some kind of stocks and are counting on that at some point in time, and thinking, about a windfall of money that's going to be available, kind of liquid cash to use, but it may not all be there the way that we expect if we, are not aware. Also, the other thought that I'm hearing from you, so it's funny, I suppose I gave you a segue there into the number 5, but this idea about being engaged. So if I'm working with an accountant, I can basically have that person doing service with me monthly, which is probably some bookkeeping and some other items. And I could just engage during tax season, just for the purpose of doing taxes. And so what you're suggesting is, if you do the latter, it's worth a little bit more of an investment to make sure that everything is copacetic and there's no surprises, and especially if there's any other life events. But that, the idea is, look, if you're running a business and you're serious about the success of your business, most people are not in the accounting business. So therefore, hire an accountant to with that, go with the monthly, take on the monthly expense, because it's well worth your investment in what you're doing. So Yeah, exactly. I mean, for
Yeah.
a fraction, like literally what you would pay an employee for 1 week, you
Mhm.
could pay an accountant monthly. Me personally, and I know most accounting firms operate this way, my monthly fee includes the tax return, monthly financial statements, unlimited consultation. If I have to convert your entity structure, that's included as well.
Mhm.
Make sure you're paying yourself right. Make sure you're compliant with business license, sales tax, hospitality tax, and you're just being proactive. A
Mhm.
lot of people have a bookkeeper that, they're making a mess all year, really. So then you're also getting hit with a huge tax preparation bill,
Mhm.
which, because they're cleaning up the books again. I mean, it's really just, and as a partner, I mean, someone to bounce questions off of.
Yeah, that's a good point. Yeah, that's a very, very, very good point. And I think that for most people on an entrepreneurial journey, that look at no one could know everything that's needed that you need to know to run a business well. And I don't care how good you are at whatever you sell, whatever service you provide, what kind of schooling you went to prior to that, what your degrees are. You better be ready to learn. And you know, for most of the population, this is not the journey that they're on. They're working for someone else who is having to be responsible for all of these elements, and they have to make all these decisions, and they've done the learning. And that's why I love the entrepreneurial journey so much, is because it lends itself to lifelong learning. It lends itself to finding out what you're made of, to reaching your potential, and also that it causes you to get out there and circulate, and it causes you to get out there and be involved with all different people for the success of your business and the advancement of their business and yours. And so it's just such a different lifestyle, and this is a part of the equation. Anyone who is serious about an entrepreneurial business, this is something that they have to have an awareness of, and they should have the right people, like someone like you. So you mentioned some of the things you do. Anything? Uh, so let me ask you this: how? This is a kind of a random question. Your name for your company? What was behind you naming your company what you did? Was there anything specific, or you just chose it, or?
Well, Ledger is obviously where you keep all your financial accounts and transactions. And I messed around with the name, and medial means at the center of your body. So I just kind of want to be at the center of all they have going on with the financial portion of their business. I don't have all answers. I'm not a financial advisor, so I don't do that. I don't provide health care, but I can partner with people and help guide them to set that up for their company, and just kind of be the quarterback for their whole situation and send them where they need to go. I mean, I have a vast network of valuable people like yourself. I mean, so I just like, I'm the numbers at the center of it all. That's kind of the way I see it. Sounds a little weird. But I went through several names, but when I came up with that one, I'd never even heard the word medial, and everybody thinks like, what in the world is that? But when I found out, I was like, this is my name, because
I love that.
Exactly what I want to be.
Yeah, outstanding. Okay, so what haven't you told us about the business that you do and the services that you provide that people need to know about you? Obviously, people are going to have information with either the audio version of this, the video version of this, to be able to get in touch with you. So that's all going to be there. But what other services or anything that you haven't talked about, or anything that you need to reinforce here? What do we need to know about Ledger Medial and the services that you provide?
Well, one thing, I do register LLCs, which a lot of accountants do not. I don't have a problem doing that. I provide, in addition to like monthly services, I do work with people, just once a year tax clients, individuals and businesses. And on the individual side, something that I've always thought a lot about, and that is, you really have three options. If you wake up to your tax time, you got to file your taxes. You can do it yourself, which is fine for a rare group of people, but probably the worst option. You could go to H&R Block, Liberty Tax. I know H&R Block charges more than I do, and it's still hit or miss if any of those people have any clue what they're doing. Not to be bash anybody, but and then third option at the CPA firm I worked at, our minimum fee walking on W-2 is $400 to prepare a individual tax return. I mean, I start at roughly half that and go up just because I want to be able. I'd say that I'm the small business quarterback and taxpayer empathizer. I want people to know that they can come to me, pay reasonable prices to get their taxes prepared. They're gonna, if we can kind of look at my pricing structure, and as long as there's nothing crazy beyond what you're telling me, I'll say, yeah, it's going to be about this, and I'll stick to that price. And you'll know that, and it's going to be less than probably almost 90% of everyone, and you're going to know that it's done correctly. So that's pretty much what I do.
Outstanding. And it sounds like, we're recording this in August, and it sounds like as people get this, they need to get a hold of you now and jump right in and get a meeting going with you and get things rolling. Well, I sure appreciate you taking the time this is very informative, and it's not flashy, but it's absolutely medial. It's absolutely critical, right, to the center of where we are. So we got to take care of business. One of the best pieces of business advice I ever got was from a guy who sat down with me and said, Rick, you got to keep your nose in those numbers. So it's good to know there are people like you to help with that part of business. Well, thanks so much for being a part of the Leaders Fuel podcast, and I'll look forward to seeing you soon.
All right. Thank you, Rick.
You bet. Bye for now.
Come